Howdy folks, my name is Alex, otherwise known as For the Z, and welcome to episode 48 of the Churner's Digest. As always, we'll start with a disclaimer. I'm not a financial or tax advisor. This is not financial or tax advice. This is for entertainment purposes only, but please enjoy. That disclaimer will be doing a lot of heavy lifting this episode because this is a topic episode, one that I think I teased last episode. This is bank account churning for dummies. I did decide to go with that name. I just couldn't resist. And I don't mean dummies in a disparaging way. I mean it in, I guess, is that like a company that does that? Like Things for Dummies series? Yeah, For Dummies is an extensive series of instructional reference books. So that's kind of what I'm getting at here. Also a little tongue in cheek. But I do recognize this is probably not what the majority of my listener base needs. I think that most people that already listen to this podcast understand the basics of bank account churning. Maybe they don't. Maybe I'm overestimating the people that are listening to this podcast. But I wanted to have something to point at for people that are just joining churning and want to learn about bank account churning specifically. And that's something that I like to do a lot. We'll talk about at the end of this episode kind of my results that I've had with this over the years. But I think it can be quite lucrative. I don't think it'll take that much time. I would not recommend going into it nearly as heavily as I currently do. I do it as a side hustle. I consider it like part of the podcast's content at this point. I was doing it before just for the lucrativeness of it, but I think that it's a little bit too much effort. I think that there are some bonuses, and we'll discuss an example coming up here, that are like quote unquote no-brainers that I think everyone could take advantage of that wouldn't take too much time. But I think that there are some that probably wouldn't be worth it. There's one that I did recently, I discussed, I think in the last episode, that I detailed, where it was with Keypoint, where it required $1,000 direct deposit every month for 6 months, and every month you get a $50 payout. And I think that that's not worth it for everybody. So this will be discussing very basics of what bank account churning is, what a sign-on bonus is, why banks offer this, how it works, what are the pros and the cons, as well as some tips and strategies for it in general. Some starting points, and then we'll even do like a little bit of a pop quiz where we'll go through how I would look at a bonus. I would read the terms and figure out what exactly is required, if it would be worth it, and whatnot. So this is an episode, so because of that, we still have to, as always, shout out to our patrons over on the Patreon. Specifically, shout out to Kung Fuer, Cleed, and Dion for the Cleed tier. Thanks to the three of you for being members there. There is something that's kind of paywalled in this episode. I'll be sharing a kind of a starting point for bank account churning spreadsheet. It's super basic. I kind of detail everything that it needs to be in the show notes. And by the way, the show notes are essentially like an essay in a way. Very written out with bullets and points and pictures. So I'll be essentially reading through it here and expanding upon some of it, but everything you should need should be living in that document as well. All right, without further ado, let's dive in. So let's start off with a very basic. What is banking account churning or banking account bonuses? Bank account churning is the act of opening up a bank account with sign-up bonuses attached with the sole purpose of just receiving the bonus. So I've done a lot of these throughout the past 2 or 3 years of me pretty heavy into churning. I like them a lot. I think they're pretty easy to do. The requirements are pretty simple. They don't hurt your credit. We'll get into all this in the coming sections, but I just wanted to give that a quick definition. So my purpose here is to just educate readers about the basics of bank account churning, trying to convince you to open up at least one bank account to see how easy you find it. So some people might just have in general anxiety about opening up accounts and having to manage them. Some people might find it easy. Some people might find accounting fun or the game of it all. That's kind of how I like it. I enjoy the game of it, and I also find it kind of easy. Because of this, I've become very meticulous and very organized, and I think it's a great skill to have, and just give it a dabble and see how you like it. There's really no negatives. I mean, you could get charged a fee as really anything, maybe like a $15 fee you could lose out on. But I think it's worth your time just to give it a shot. We'll go into detail of pros and cons coming up. So understanding the basics. What is a sign-on bonus? A sign-on bonus typically has a few requirements for you to receive the bonus. Bonus language is precise, as consumer rights are heavily regulated with the Consumer Finance Protection Bureau, or the CFPB. And the sign-on bonus is intended for, once you meet those requirements, to pay out a certain lump sum. And sometimes it doesn't come in the form of a lump sum. Sometimes it comes in the form of payments over a certain period of time, but it depends on the bonus that you're going for. An example of these requirements could be any combination of the following. So there could be a direct deposit requirement, which is a direct deposit from your employer for some amount, typically something like a cumulative of $500 or more in 1 month or over a set of months. A requirement is normally to maintain a positive or specified balance. So they don't want you to get the account to negative, or I think that's really it, have a negative, or sometimes they say they want you to hold a balance of $1,000 for a certain period of time. Sometimes they require debit card transactions. So sometimes it says over the terms of the qualifying period, complete 12 transactions in order to receive the bonus. Some of them state that you have to specifically keep the account open for a specific amount of days. So sometimes it says, after receiving the bonus, keep the account open for 6 months or 12 months. Otherwise, the bonus will be forfeit. And oftentimes it says to turn on electronic statements or e-statements. And this is always a good idea, because oftentimes these accounts will come with just some random fees. And an easy one that they get you for is like a paper statement fee. So they mail you a paper statement at the end of every month or end of every statement period. And they charge you for that, normally like $2 or something. So turn on e-statements, you won't have to pay for it. Next, we have why banks offer sign-up bonuses. Some people might be looking at this and thinking, well, this bank's offering me $500 to open an account. How does this make sense for them? And for banks, they know that once a customer opens a bank account with them and performs certain actions like direct deposits or debit transactions, these customers become sticky, which means that they will be customers for life, or they'll at least have their foot in the door and they'll probably not change. They know that most people, when they open up a bank account, don't change. I mean, a normal person, can you think of like your parents? They probably have the same bank account they've had for like the past 50 years, and that's super valuable. And these banks know that in order to convince you to change, they got to pay you some big bucks and make it enticing. So that's what these sign-up bonuses come into play. How bank account churning works. Bank account bonuses are plentiful as there are thousands of banks. Doctor of Credit, aka DOC, or DOC, has a constantly updated list of current bonuses available, with their requirements and insights on how to meet them. The entire process involves opening the account, meeting the requirements, and avoiding fees, if any, receiving the bonus, and then closing the account. One thing to note is don't take the terms directly off their Doctor of Credit site, because they often either forget to update something, or something's not totally accurate, or it doesn't exactly match what it says on the site. So definitely be sure to read the terms. And a note on the terms themselves. By terms, I don't mean like the big flashy, when you go to the site, it has like a nice pretty promotional image that says, oh, deposit $500 and get $300. I'm talking about the nitty gritty fine print at the bottom of the site, the verbal garbage that is just hard to read and in like lawyer speak, that says bonus account information, checking offer is not valid to existing Chase customers, blah, 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 that kind of bonus. So those are the ones you need to actually read and be sure you understand. And we'll do an example coming up here in a little bit. I'm not sure how it's going to go over one-way podcast, but we'll give it a shot. Meeting the requirements. So requirements range, as I said, from direct deposit to debit card transactions to account balances. And let's go through the different ones of how you can meet them. So direct deposits. Banks like direct deposits because they can be sticky. Banks often require direct deposit X amount of money, or require the direct deposits to be recurring or to be one time. So it should definitely state this in the terms. Some examples could say cumulative. So if it says that, it doesn't matter how many direct deposits you have, you just have to meet that amount. So it says cumulative direct deposits of $500 over the span of the bonus, the qualifying period. As long as your direct deposits total that amount, you've met it. Something I like to do is if it says 500, always do like 501. Always make sure you're over it, just in case if they're in the programming, if it's programmed, they're doing like a greater than, not a greater than or equal to. Definitely be wary of that. If it specifies a certain monetary value for each direct deposit, such as two $1,000 direct deposits, then obviously you have to have two direct deposits in that amount to meet the requirements. If you don't have an easily changeable direct deposit, you can always check Doctor of Credit on their sites. They have a link on all of the bonuses to a master list of methods that bank accounts count as direct deposits. So a little nuance behind ACH transfers. There's nothing that comes along with the transaction to really tell a bank if it's a direct deposit or not. The transfer just says, like, from the clearinghouse it came from, the money that it's associated with, and description that comes through. It doesn't have to say payroll. It doesn't have to say salary, and there's no like flag on it that says direct deposits. So these banks have their own proprietary way of determining what's direct deposit. Some are better than others. So through many data points and through many people submitting their findings, Dutch Credit has created this master list of accounts that show what counts as direct deposit and what doesn't. Oftentimes, like a push from Fidelity will count because that looks like it's from an investment account. So that could be retirement. So the banks count that. There's a whole bunch of ways you can go about it. My personal easiest way is I just do direct deposits. Mine are easy to do, and we'll talk about this more later. But there's always a backup if you want to do some form of getting around it with some ACH transfers. Debit card transactions. So often banks want to see you using the debit card, and I think this is because they think getting a consumer used to using their debit card will get them into the habit of using the card, and then they're using the account more. The more you spend out of it, the more money you need to put in. The more you use the account, the more you're going to make it your main account. So oftentimes it says use the card 12 times or something like that. I like to meet these by either doing Cash App reloads. So if you have like any kind of app that'll do a debit card reload, it could be Cash App, it could be, I think Venmo does that too, or heck, even like a betting app. Sometimes they allow you to do deposits there. It's tough. It's tricky to see if the banks qualify those. Like if it says point of sale system, like POS in the transaction, that normally counts as a debit card. Main things for these is to check out the Dr. Credit comments on the post to see what people have said qualifies. I know I personally always try and post in the comments to say what exactly I used, what worked. I know, for example, like Genesis Credit Union has a nice 6.75% checking account on up to $7,500, but you have to do 12 debit card transactions per month. I can do Cash App reloads in there, and I know it triggers for them. Stuff like that. If you want to play it safe, you can also do just small charges in the debit card, like getting Amazon gift card balance reloads. I think the minimum is like $5 there now. Or just buy a bunch of individual bananas or something at self-checkout. And finally, we have account balances. So sometimes the banks require you to have a certain amount of funds deposited in the account for a certain period of time. And these should be spelled out very clearly. So there is normally a qualifying period where you have like 15 days to deposit $15,000. And then a holding period where you must hold the funds. You must hold your $15,000 for 90 days from the end of the qualifying period. So you're holding, if you deposit it from the first day of the qualifying period, 105 days, because that's 15 days plus 90 days, 105. And then you have to wait until the bonus payout. And sometimes they say 30 days past, you've qualified. Now, from my understanding, and definitely read the terms, and this isn't financial advice, whatever, I normally, once I've finished the holding period, I feel free to withdraw the funds, and definitely read the terms and see what it says in there specifically. But normally that is the case. If you've finished the holding period and you're now in like the waiting for bonus period, you can pull out funds. I normally leave like maybe $50 in the account just to leave the account open and not be on low balance. And then once the bonus hits, I'll normally wait a little bit and close the account. And by a little bit, I mean any range from a month to 6 months. As long as there isn't something stopping me, there's sometimes clauses in the terms that say you can't close the account before 60 days or we'll claw back the bonus, or 6 months or they'll claw back the bonus, or 12 months they'll claw back the bonus, or sometimes there's an early termination fee on the account, so definitely read through the fee schedule as well. And if you don't know what a fee schedule is, every bank has to, when you're opening up the account, just before you get, at some point in the account opening process, there should be a bunch of forms that they're saying you've read, and you should actually read them. You should actually read the bonus terms if there is a form, and if there is a fee schedule, definitely read the fee schedule. Normally they're very easily laid out. It's like a little chart, and it says bounce check fee, manual account review fee. What you're looking for is an account closure fee, a early termination fee, a inactivity fee, anything like that. Definitely make note of it and put it in whatever you're tracking this in. Next section, section 2, we're going to look at the pros and cons of bank account churning. So this document is very difficult for me to make because I feel like I've done this for so long now that I don't know what is common knowledge to me that I'm like just skipping right over. But it could be brand new information that you've heard for the first time. You're like, wait, I want you to elaborate on that. So the Discord is really useful for that. You have access if you get the Discord tier on the Patreon, and be some friendly folks in there that can answer as well as me. All right, section 2, the pros and cons of bank account churning. Anything that sounds too good to be true normally is. So what's the catch? The main drawback to bank account bonuses or churning is the time and effort involved and the organization required to effectively pursue a bonus. Let's break down the pros and cons. So I have a little table here. The pros I have is you earn extra money, technically interest for minimal effort. Sometimes bonuses pay out between $200 or $600. They could even be more than that if you have some whales of bonuses. Some cons, time and effort involved. I don't really have a time estimate. I say later, like maybe a few hours per bonus. Researching the account is just reading the Dr. Credit article, reading the terms and conditions, signing up for the account, and then doing the maintenance of setting up your deposits and making sure you have it all tracked. Maybe a few hours. But if you spend 3 hours on it and make $500, that's $100 an hour you're getting paid. That's kind of the mentality I go through of this, is your hourly rate is what you're really looking at. And it's hard for me to track how many hours I'm spending on these things, but I think the rate is pretty good. Next con is potential impact to your credit score. So I know a lot of people are thinking, well, how does this not impact my credit score? So opening up bank accounts don't impact your credit score unless they do a hard pull or hard inquiry on your credit report. Now, when you're opening up the account, it should be very explicit that this will impact your credit score. If it does not say that, it won't impact your credit score. You will have to put in your social security number, your address, all your personal information. You might even have to upload your driver's license. They do that all the time. But you're opening an account with them online, so they need to verify that it's you. Don't be wary. It's a regulated bank. I mean, there's leaks all the time. Honestly, my social security and my information is probably out there with just about everybody in the world. So if you're concerned with that, you should just read your credit reports more than anything. But this opening up bank accounts should not impact your credit score. Something it will impact is your checks score. Now, the check system is essentially your credit score, but with bank accounts. And you might be wondering, when does that even get used? I've never heard of it. It's only used when you open up a bank account. And it should really only come into effect if you're opening up a lot of bank accounts. Like, I've opened up 19 this year, and if there's a bank that's check sensitive, which I'm only opening up a bank for a bonus, so it would just stop me from opening up a bank if they're checks sensitive, which means if you have a lot of banks opened up recently, I think it's really it. You can get your checks report if you're curious. I don't really think it's something you have to worry about if you're really just starting off. Just don't go crazy and open up 10 bank accounts in a day. It wouldn't cause you to have any of your current accounts closed. You just have a hard time opening up an account. The only time this would impact you, only time opening up bank accounts would impact your current bank accounts is I've heard that Chase, if you get an account terminated, like suspended because you've broke the terms of service, which bank accounts do bank account bonuses do not break terms of service. You're literally following their terms to the T. If you perform fraud or some kind of money laundering or something in the account, they terminate it. Chase has known in the past to terminate full accounts for that, so including credit cards. I haven't experienced that. I actually just recently had an account closed. I had my upgraded account closed, and I have Chase accounts, and I haven't seen any ramifications, knock on wood. But just wanted to call that out. Another con is potential fees or missed bonuses if terms are not followed. So there are early account termination fees, minimum balance fees, etc. If you wind up incurring those fees, you obviously are losing some money. My mentality is, even if you get like a minimum balance fee tacked on, normally those are like $5 to $10. Normally you can call and get it waived. And normally if you get a bonus that's $200, you're now just losing profit, which doesn't really hurt you. And final con is your taxes become minimally more complex. Again, this is not tax advice. I'm not a financial advisor. I'm not a tax advisor. But when you receive bonuses, these are considered interest, and we'll talk about this more in a bit. And you should get a 1099, whether you receive one or not. Any interest you earn does count as any bonuses you earn does count as interest, and therefore is income, and therefore needs to be reported. That's easy. You write in your little spreadsheet, I earned $200 in this bonus, and then at the end of the year, if they don't issue 1099, you just report that as income, as a 1099 int. If you do get a 1099 int, you just fill it into your tax filings, or you just give it to your accountant, and they'll take care of it for you. One thing to note is that all these bonuses, if you're getting $200 in bonuses, you still have to pay taxes on that. So you're losing, like, say, 20% of it. So you're really making like $180. So I don't account for that, but since I'm still making a profit, I like squeezing every penny I can, but I figured I'd call that out. So let's break down each of these cons specifically. Well, the pros first. Earning extra money. There are many bonuses, some we will discuss below, that are truly no-brainers or easy money. Open the account, perform a direct deposit, sometimes can be a simple bank transfer, which we've discussed with the alternate methods of meeting direct deposit, and you can receive your bonus. For tax purposes, these bonuses are considered interest, and you're required to report the bonus as interest. You're required to report the bonus as income. Most banks will issue a 1099 int for their bonuses, but the IRS regulations do not require them to send out one if your interest earned is under $600. So if you just open an account for a $200 bonus, you earn the bonus and close the account, they're not legally required to send you a 1099. However, just because you didn't get a 1099 doesn't mean that you don't have to report it. You can read online of people saying that I didn't get a 1099. Technically, as far as I understand, I'm not a tax advisor, it's not financial advice. From what I understand, if you don't get issued a 1099, the IRS is not made aware that you made that interest. Regardless, just like if you're working at a restaurant and you earn tips, the IRS doesn't know that you made cash tips. You still have to report that. You made a bank account bonus for $200. The IRS did not receive a 1099 int saying that you made $200. You still made $200. You're still liable for that tax. Definitely consult a tax professional. I'm not a financial advisor. It's not financial advice. So for the cons, time and effort involved. Reading the terms, applying, tracking, and meeting the requirements, receiving the bonus, closing the account, reporting your interest during tax season, all may come easy or hard to some. It requires decent organization skills and bookkeeping. The effort is minimal, but there is effort required. I would estimate a few hours spent for a bonus over the time of the bonus is to be expected. To make tracking easier, I've added a starter sign-up bonus tracker spreadsheet in my Patreon. It's very basic, and fields that I recommend are things like what bank you opened up with, what the bank account type was. That would be checking your savings, what date it was opened, what date it was closed, what date you received the bonus, what bonus amount was received, what the requirements of the bonus are, maybe a link to the Doctor of Credit article, maybe a link to the bonus on the website. One thing I will call out, don't rely on the actual bonus on the bank's website. Often they'll remove it once the bonus is no longer on. You can take a screenshot of it. I normally don't. That hasn't come and bit me in the butt yet. The Doctor of Credit article is normally enough for me to decipher what the terms were, but something to call out. Potential impact to credit score. Most do not, but some banks and credit unions will pull your credit when you open an account, and this will impact your score. If you don't want this, avoid these banks and credit unions. They'll make it clear when they want to do that. Impacts your check score. I detailed this pretty much already, but I'll read through this. Some banks report to and use checks to see your bank account worthiness, similar to a credit score for banks. This score is only used when applying for new bank accounts. So if you open up a few bank accounts in a year, you should not see any issues with opening new accounts in the future. An additional thing to think about is the ethical implications of this. Now, again, I'll reiterate, you're not doing anything illegal. You're following the terms of the bonus. But you do have to notice that you're opening this account and closing the account after receiving the bonus is not exactly what the bank intended when they offered the bonus. They are looking for you to become a customer, but you are completely in your right to not do that. You're allowed to open up the account, get the bonus, and leave. A good rule of thumb is to wait a few months after receiving the bonus, as to not bring attention to your true intent. The bank understands that there's some gamers that are going to be in it just for the bonus. They could say in their terms, open an account with us, receive the bonus, but if you ever close your account, you don't get the bonus. It could say that in the terms. They don't say that. They understand there will be gamers. They are hoping to win you over anyway. Just something to keep in mind. Potential fee, the final con here. Potential fee or missed bonuses if terms are not followed. Some accounts have fees that will be assessed if certain requirements are not met. Some potential requirements include a minimum balance, a paper statement fee, early account closure, inactivity fee, etc. These will all be clearly laid out in the bank's or credit union's fee schedule available on their website. You should also be clearly prompted it when you're opening the account. Some accounts have these fees. Dr. Credit outlines most of these fees in the bonus, but I would definitely look through the fee schedule yourself. Don't rely on someone else's research when it's your money at stake. Again, these are minimal fees and they normally can be waived, but I personally look at the fee schedule myself. It takes like maybe 5 minutes. This is where bookkeeping comes into play. Make note of the important fees for every account you open to avoid them. Do keep in mind if you wind up paying $10 in fees and you made a $200 bonus, you're still making $290 in the bonus. It's not the worst thing in the world. So let's go to section 3. Let's talk about general strategies, tips, and some advanced points for churning. So for planning and research, I often find and compare my offers on Doctor of Credit. So on there, they have a list of their current bank account bonuses. I'm a habitual reader of Doctor of Credit. I check it multiple times in a day, like at least 15 times in a day. It's a fantastic resource. If you're like scraping the bottom of the barrel for sign-up bonuses, I'll often just search the state I'm currently in. Their search, I don't know if it's true for their global search. Nope, works fine. I'll often just search the abbreviation of my state I'm in. So if I'm in New York, I'll put NY, enter. And if it's normally ranked in order of, I actually don't know what the ranking is. But you can just scroll through and see what bonuses are available for your New York. They also have their list of bank account bonuses, but often they don't put all of them in there. They just put the good ones, like the real good ones. So if you're really scraping the bottom of the barrel, you can go for that. Definitely understanding the terms and conditions. Read them yourself. Don't rely on Dr. Credit's coverage as it sometimes is inaccurate or out of date. They post a lot on their site, so sometimes things fall through the cracks. Do the research yourself. Determining which are easy. Which bonuses do you think would be good for you? Can you do a direct deposit? Can you do $1,000 worth of real direct deposits in a month? If you can, then you can't go for that bonus. Can you do 500? Find what's achievable for you. It also helps when you're doing these direct deposits. You might be thinking, well, that's my money. How am I supposed to live? I'm someone who's a firm believer of not living paycheck to paycheck. You should have a few months of expenses put up. that you can afford to miss your direct deposit for maybe a week while you transfer it around. Like you get the direct deposit into this new account, I just pull it right out. If there's no requirements on the bonus, this is I have to keep the funds in there. I'm pulling those funds out and just leaving maybe $5 in the account. As long as there's no fees or anything that says I can't do that or I'll get charged, that's what I do. One other thing I'll call out, a lot of pay portals where you can update your direct deposit allow you to split your direct deposit. Mine is really good. It's Workday. They let me do exact amounts. I can say I want $1,000 of my direct deposit to go to this bank account. I want $501 of my direct deposit to go to this account. It makes it so easy for me. I'm able to just get organic direct deposits into the account I want at the exact amount I want. Yours might not be as easy, so maybe you want to target debit card funding ones. To each their own. What to do when you receive the bonus. As I detailed before, a good rule of thumb is leaving the account open for a little bit. I normally pull the funds out, leave maybe $50 in it. When you do go to close your account has to be at $0. The funds can't be pending and has to be at $0. Sometimes if you open up the account and it needs a share account, so there's credit unions where technically the money you have in there buys you a share in the company, like a part ownership. If it says your available balance is $0, but you have like $5 that's in there as your little a requirement to hold the account, they'll mail you a check. So don't worry about that. Point 2 for our strategy tips and advanced points for churning. Check Dr. Credit for data points. Unsure what triggers a direct deposit or debit requirement? Check the comments on the bonus on Dr. Credit. There is the big list of what methods count as direct deposit bonuses, but that has to be updated by Will and Chuck over at Dr. Credit. There could be comments that are more recent. Definitely check for more recent data points. See what people are saying in the comments. You can also check Reddit or churning. It's a great spot to see what's going on. You can do some searching there. Don't ask questions. Do some research. Figure it out. Next, we have managing multiple bank accounts. People might find that stressful. I think the way to get out of being stressed for that is being organized. Having a good spreadsheet, having a good tracking system, having an app or something that can track all your accounts. I go in every month and I update my spreadsheet that has all of my accounts in it. I currently have, how many active accounts do I have open? I currently have 65 open bank accounts, individual accounts with a bunch of different banks. I go in every month and I update all of them. I know where all my money is. I know what bank accounts are currently going for. I have 2 in flight. I have a bunch that have paid out already for this year. Just know your finances. Be on top of it. Maybe that's stressful to you. Maybe that's something you can't do. But think about the marginal increase of adding one more bank account. And it's only for 4 months. And you never have to look at it. You got to go in there 2 times a month and transfer money out for a month because you just need to do one direct deposit. Give it a shot. Give it a dabble. See how it is. See if you can handle something like that. Maybe you don't want to deal with it. Maybe it's not worth the money. Maybe it's not worth the effort. That's fine. But at least you can say you tried, right? Avoiding common pitfalls, like I mentioned with inactivity fees, early account closure fees. Definitely read the fee schedule. Entering your account info incorrectly. So this is hat tip to Bleak Choo Choo on Discord. They called out that sometimes when you're adding your direct deposit when you're adding the new account into your work portal, it can be stressful. That's my money going to a new account I've never had a deposit go into before. I do this pretty often, so it's second nature now, but these payroll players, if you fat finger something, like you forget a number, if the account doesn't exist, it'll normally bounce back and you get contact and they'll say, hey, do you want just a check? But to avoid this, if you can, pull up your payroll partner on your computer and pull up next to it the account you want to deposit into and copy paste the account number over, copy paste the routing number over. Then you can copy it into your clipboard, do a little search on the browser and paste it in there and make sure it matches perfectly. That's the best way I do it. But it can definitely be stressful. So take your time and make sure you've typed it in correctly. You can even start with just a $1 direct deposit test just to see if it works. Next, we have follow the terms exactly. So here's our little pop quiz we're going to go through. Now, the bonus we're going to look at is kind of one of the no-brainer ones. There's a link to it in the show notes. It is Chase's $900 checking and savings bonus. So looking through Doctor of Credit, it's been extended through October 16th. Looking at Chase's website, I think it says it's expired. Yeah, October 16th. So there's still 2 months to do with this account. That is to enroll in the offer. You have until October 16th to enroll in this offer, not to meet the requirements, just set it up. So Doctor of Credit always does this format. They say the max bonus amount is $900. The availability is nationwide, online, or in branch. The direct deposit is that there is a direct deposit requirement, but there is no minimum. And you can click a link here to see what triggers the bonus. Doing that, this page is very large, so it takes a little bit to load. Chase. There's a whole plethora of things that looks like they count towards direct deposit. Looks like a good one would be Apple Cash, maybe. Maybe looks like Fidelity doesn't work anymore. I think you get the point. There are some options if you have an account open elsewhere that you can transfer into Chase to see if you'll get it to trigger a direct deposit. Obviously, easiest way is just have a real direct deposit. The additional requirements are none for the checking and $15,000 for the bonus for savings. So that is quite high. If you don't have $15,000 that you're okay with locking up for a period of time, don't go for that portion of the bonus. But you still have a bonus here. Let's keep reading. Hard or soft pull. Doctor of Credit reports that it's a soft pull, which means it won't affect your credit score. Check system, they don't pull checks. So for me, being checks pretty sensitive because my check system looks like a laundry list, they won't care. Credit card funding. Something that I won't get into too much here, but when you open up a bank account, these banks want your money. So they'll often offer credit card funding. You can take a credit card, fund the account with a credit card, and most times it doesn't show up as a cash advance, so you won't pay fees on it. This is a great way to meet sign-up bonuses on credit cards. Not going to talk about it too much, but it's essentially just free money. You're taking money from a credit card, putting it into a bank account, and then you can just take it out of the bank account to pay off the credit card. The bank has to pay a swipe fee. They don't offload that on you. They want your money. Monthly fees for this account, there are $12 in monthly fees, but they are waivable, so we'll continue reading. There is no early account termination fee. The household limit is none, which means you can have more than one person in the account open it. So if you have a second player, P2, like a spouse or a significant other or a sibling or something, two people with the same address can open up the account and get a bonus. So scrolling down to the offer, Chase is offering a checking and saving bonus worth up to $900. The bonus is as follows. Receive a bonus of $300 when you open a Chase total checking account. Something to make note of is specifically what account do they say you have to open. Oftentimes, banks will offer a couple different accounts or a few different accounts, and you have to open specifically the one they call out in their terms. So with this one, it says Chase's total checking account. Chase offers some checking accounts. They specifically call it the total checking account and have a direct deposit post to it within 90 days. Now, again, I'm reading off of Doctor of Credit here just to get a sense of what the bonus is, and then I'll go over to Chase's website and read what their terms actually state. Next, we have receive a $200 bonus when you open up a Chase savings account. This one doesn't seem like just the generic Chase savings account. And deposit $15,000 or more in new money within 30 days of opening the account, and maintain the balance of $15,000 for 90 days. So you have 30 days from the account open to deposit $15,000, and then from that period onwards, you have 90 days to hold it. Then if you receive both of the bonuses, if you beat both requirements, they'll give you an additional $400. So the $300 for the checking, the $200 for the savings, plus the $400 for the double is $900. A huge bonus. Scrolling down, Dr. Credit has the fine print listed here, but I'm not going to read that. I'm going to read that from Chase's site. The fees that Dr. Credit lists are normally pretty reliable, so I will read those. Chase Savings Account comes with an account monthly maintenance fee of $5. The fee is waived with any one of the following. So these are or, not and. Keep a minimum daily balance of $300 more. Well, in order for me to meet the requirements for the bonus, I have to hold $15,000. So I know I'll satisfy the monthly fee waiver, but I'll keep reading. Have at least one repeat automatic transfer from your checking account of $25 or more. One-time transfers do not apply. Or have a linked Chase Premier Plus checking, Chase Premier Platinum checking, or Chase Private Client checking. So for me, in order to get this fee waived, I will be keeping a minimum daily balance of $300 or more. We will have $15,000 in the account if you go for the savings. Again, you don't have to do the savings portion of this. You can just go for the $300 bonus for the checking. Speaking of the checking, the Chase Total Checking Account comes with a monthly service fee of $10 to $12, which is waived if you complete any of the following. You have a monthly direct deposit of $500 or more. You keep a minimum daily balance of $1,500 or more in the checking account. Or you keep an average daily balance of $5,000 or more in any combination of Chase qualifying checking, saving, and other balances. So if you go for both of these bonuses and you deposit the $15,000 into the savings, that $15,000 will both satisfy the monthly fee waiver of the checking and the savings. If you just go for the checking, I would probably do either the minimum daily balance of $1,500 if I don't want to worry about direct deposits, or just do the $500 direct deposits once a month. Early account termination fee. Dr. Credit says that there used to be a 6-month period where you would lose the bonus if closed out, but sometime in 2022, they removed that. The verdict at the bottom of Dr. Credit is usually good to see if there's been better bonuses in the past. They say that this is the best public bonus we've seen on this account. Really excellent offer, much better than the prior $600 offer. So, now that we've read all that, let's go to Chase's actual website and see what the terms state. Right at the top, they have their nice little signage here that has like the pretty $300, $200, get $9 for both. I'm not going to put too much weight on this, but I will read it. It says to get $300, open a Chase Total Checking account and set up a direct deposit within 90 days of coupon enrollment. Coupon enrollment just means opening the account and applying the promo code. Something I hadn't mentioned in this whole article. See, these are things that like they're so basic I don't think about it. Oftentimes these bonuses will require a promo code. Sometimes they don't, sometimes they do. Sometimes they will explicitly state in the terms when you enter promo code bonus 50. If you see that, and when you're opening up the account, scan every single page of that application form and see where it says promo code. Do a Control F on each page. You must insert that. Most times, if you forget to insert it, you won't be able to get the bonus. You've already opened an account. You're no longer a new customer. You didn't include the promo code. Make sure you add the promo code. So for this bonus, you have to click the button on the site or give your email address and then apply your promo code. I've had experience with Chase where they will retroactively add my coupon code, but this isn't true for all accounts. For the savings account, it says get $200 when you deposit a total of $1,500 within 30 days and then maintain it for 90 days. And then $900 says when you open both at the same time and complete qualifying activities. And then they detail the fees, which looking at this, it's exactly what Dr. Credit reported. How it works. Open the account online with your coupon code or enter your email to get a coupon code to bring to the Chase branch to open an account. One way you could, like, if you're not sure you want to open this just yet, you can put your email in, get a coupon code, save it in your email, and then use it later. Next, it says to complete the qualifying activities and then receive your money within 15 days. So it says within 15 days, if you're completing your requirements, you should receive your bonus. Now, if we scroll down, here's our nice terms. Oh, yeah. Let me zoom in to make it full screen here. All right. They detail a little bit more about the service fee. I think we're satisfied on that. I'm not going to read it. It then goes on to say bonus account information. Let's read this. Checking offer is not available to existing Chase checking customers. I don't currently have a Chase checking account, so I satisfy that term. Savings offer is not available to existing Chase savings customers. I am not a Chase savings customer. Both offers are not available to those who have accounts who have been closed within the last 90 days or closed with a negative balance within the last 3 years. I have not closed an account with the past 90 days, and I have never had a negative balance, so I'm still in the clear. You can receive only one new checking account and one new savings account opening related bonus every 2 years from the last coupon enrollment date, and only one bonus per account. So what that means is the first part, you can only receive one new checking and one new savings account open related bonus every 2 years from the last coupon enrollment date. That would be the date that you applied the coupon to the account. So I just so happen to have, in fact, had a Chase bonus in the past. I've detailed this on a previous episode. Let me pull up my spreadsheet. Where is it? I don't know. Where is my spreadsheet? I might have closed it. Let's open it up. Now, if I look in my spreadsheet for Chase, another thing to note, when you're making your spreadsheet and you meet a bonus, don't ever delete anything. Keep it all for historical purposes, because you might want to go back and do the bonus again. Let's see. Where is Chase? Chase is in value 66. So I opened the account on January 21st of 2022. Today's date is August 21st of 2024. That is 2 years. I am eligible for this bonus still. You normally won't have to go through these steps because you don't open a bunch of checking accounts like I do habitually, but it's good to know when I'm able to meet this bonus. And then it also goes on to say, and only one bonus per account. And I think that just means per account you're opening. So like I can't get two $300 Chase checking bonuses into my one account that I just opened. All right. Coupon is good for one-time use. Great. So we are eligible for the bonus because we're now going to the requirements to actually receive the bonus. To receive the checking bonus, open a new Chase total checking account, which is subject to approval, which is for, they don't check your checks. I don't even know what they check. I don't know who they're denying. And 2, have your direct deposit made to the account within 90 days of coupon enrollment. Your direct deposit needs to be an electronic deposit of your paycheck, pension, or government benefits, such as Social Security from your employer or the government. Person-to-person payments, such as Zelle, are not considered a direct deposit. Microdeposits do not qualify as direct deposit for the bonus. Microdeposits are small deposits, typically less than $1, that are not considered a direct deposit, that are sent to your account to verify it is the correct account. After you have completed all the above requirements, we'll deposit your bonus into your new account within 15 days. That was a lot. Can you pick out what was important in there? What was important was you need to have a direct deposit to be made to your account within 90 days of coupon enrollment. That's it. Every single bonus is going to say your direct deposit needs to be an electronic deposit of your paycheck, pension, or government benefits. It can't be microdeposits. It can't be a person-to-person transfer. Even though it says that, that doesn't mean that that is what is enforced. That's the rules. If you do one of the requirements, if you do one of the things that Doctrine of Credit's list says counts as direct deposit, like a transfer from, I think it said Etsy, like an Etsy deposit into the account, and that's not a direct deposit, and you didn't receive the bonus, if you call up the bank and you say, hey, I didn't receive my bonus, you don't have a leg to stand on because Etsy isn't a payroll. You could, if you do genuinely sell something on Etsy, you could say, oh no, I did make a sale on Etsy. That's my payment. That's my payroll. They might ask you for a pay stub. If you can prove it, great. If you can't, you're SOL. Hopefully that's clear. So that's it for our Chase bonus for the checking. It does say that, where did it say it? After you've completed all the above checking requirements, we'll deposit the bonus in your account within 15 days. I was paid out within a day. I've already done this. I've done the checking. They paid out very quickly. You could literally make a direct deposit for $1 and they'll give you $300. Seems like a pretty no-brainer to me. Next, for the savings bonus. To receive the savings bonus, you must open a new Chase savings account, which is subject to approval. Great. Deposit a total of $15,000 or more in new money into the account, into the new savings account within 30 days of the coupon enrollment. So this account doesn't really make much interest. So I would try and deposit that funds as close to 30 days as I can, obviously giving some buffer. So maybe like within 25 days, I'll deposit it. And then it says, where the heck? And then maintain at least $15,000 in the balance. Maintain at least a $15,000 balance for 90 days from coupon enrollment. Now, the new funds cannot be held by a Chase or its affiliates. After you've completed the deposits, we'll deposit your bonus into your new account within 15 days. They say new funds, so you can't transfer from another Chase account, and it has to be new funds to Chase. Makes sense? One thing that they state is, for the third point, it says maintain at least $15,000 balance for 90 days from coupon enrollment. Now, I don't think that's totally true, because that would say that the qualifying period of 30 days for you to put the funds in overlaps with the 90 days. I think it's truly by the 120th day after coupon enrollment. So that's after the 30 days of your new money into the account. Then after the 90 days from that 30 days from you holding the money in that account, that is when your qualifying period is over. So 120 days from coupon enrollment. It doesn't explicitly say that, but if you ever like, I'm not sure which one it is, just do the higher days, because why not? You just hold the funds there for a little bit longer. You're losing a little bit of interest, but you'd rather not miss out on your bonus, right? You can also ask Chase. You can ask, hey, chat with them, call them up. Hey, can you explain this term to me? It sounds like I only have to do it from the coupon enrollment date. A lot of times the customer service representatives don't really know what they're talking about, but sometimes they can help. And then finally, to receive the extra bonus, you must open the checking and savings account at the same time and complete all your requirements above for both the checking and the savings account. After you've completed all requirements, we will deposit the remaining bonus due in your account within 15 days. To receive any of the above bonuses, the enrollee account must not be closed or restricted at the time of payout, which should be 15 days from when you have satisfied the terms. Eligibility may be limited based on account ownership. The annual percent yield of the Chase savings account effective this date is 0.01% for all balances. And then they go on to say bonuses are considered interest and will be reported to the IRS in the form of 1099 int. And then that's it. That's the bonus. So there is a lot of jargon there. None of it is that difficult to understand. I mean, maybe I'm crazy because I've read them 100 times, but that's the bonus. I think that bonus is pretty easy, pretty straightforward to go for. I like that one. Every single time it pops up, if I'm eligible, I will without a doubt go for it. It's $900 that I know I will make. I thankfully am in a financial position where I have $15,000. I can just park and Chase and know I don't need it, but maybe not everybody. But even just the $300, any direct deposit, that's great. Go for it. You could even open up that account and just start doing random transfers in. Now, they can't be, when these transfers that are quoted on this site are saying that they count as direct deposit, that's not, I go into Chase, I link my Ally account, and then I pull money into Chase. So I'm in the Chase app, and I say transfer money from Ally to Chase. No, I have to be in Ally, attach my Chase account, push money from my Ally account to my Chase account. I'm not saying Ally counts, but this is just an example. You have to push money in, not pull money in, if that makes sense. Next bullet flows perfectly with my previous example. Tracking is important. Some bonuses are churnable, which means you can do them multiple times. Often they require you to wait X months from when you open the account or close the account to receive the bonus last. If you want to get more into this, I definitely advise tracking things. Next, I say, I received my bonus. Now what? Some accounts have an early account closure fee. Some have clauses in the terms of the offer that say that they will revoke your account if you close it early. What I like to do is, in my spreadsheet for the bonus, under the closed date. So if the row is whatever bonus I'm going for, there's a column of closed date. I put a future date into that closed field of when I would be eligible to close the account without losing the bonus. But when I do that, let's say the date is February 15th of next year, I will round up to the next month. So I'll put March 1st. So I know for a fact, March 1st, even if I did some calculations wrong, I have a buffer of 15 days. I'm definitely good to close it by then. Sometimes I get lazy and I don't close it then. Sometimes I'll close it like months after the bonus. Most accounts don't have early closure fees or inactivity fees. Some do. Inactivity fees are like 12 months. I write them down in the spreadsheet and I make note of it and I get on it if I have to close it. Like I have one account that I'm eligible to close, I think right now with Elements Bank, and I'm not in a rush to close it just yet. I think they do have a fee associated with it, so I do kind of have to close it at some point, but normally I'll just, like, if I have a drive somewhere that I know I'm going to spend like an hour, I'll call them up and do it then. Next bullet. Oh no, I was charged a fee on my account. What do I do? It's okay. Call the bank and explain that it was a mistake and if it could be waived. Most banks will. If not, remember, you're probably still profitable from the bonus that you did earn. It's not the end of the world. Next is the worst thing everyone doesn't like to happen. I haven't received my bonus, or I missed the requirements or something. What do I do? So first, double check they actually met the requirements. So go through, log into your account, see the exact dates that your direct deposits went in. Was it a real direct deposit? If it wasn't a real direct deposit, it's probably not going to get paid out, buddy. You didn't technically satisfy the terms. You needed a real direct deposit. If you have proof for those direct deposits, awesome. Like a pay stub or something, they might ask for it. You can send that in. All right. You met the requirements. Now, seriously, check again. Because you don't want to call up a bank and you really didn't meet the terms and then you're looking like an idiot because you didn't read the terms properly. If you're sure that you met the bonus, call the bank. Explain that you signed up for a promotion and you believe you met the terms. Have the Doctor of Credit article up or your requirements up, but don't tell them you're reading off of Hey, I'm reading this online forum for bank account bonuses. You're not going to get any sympathy there. I would call, I'd say, hey, I opened up a bank account. There was this promotion going on. I like to play a little dumb just to be like, oh yeah, there was like a promotion. I thought I met the requirements, even though I know to the date, the date I opened the account, the date I met the direct deposit, what the terms are. And I'm like, hey, the terms state to receive a direct deposit within 90 days of $500. I met that. It's been this many days since I did that. When should I expect my bonus? That's normally how I phrase it. When should I expect my bonus? And they'll either say, oh, it takes some time, or oh, you didn't meet the requirement, whatever it is. Normally, it doesn't have to go much further than that. They'll give you a date. You'll keep track of it. You'll get it eventually. Sometimes, in rare cases, you truly did meet the requirements and you didn't receive the bonus. Your last-ditch effort, your break glass option, your last resort, your Hail Mary is a CFPB complaint. I referenced them before. The Consumer Finance Protection Bureau. They are a government body that will protect consumers when they are not being fairly treated by businesses. They have a specific section for banks. I have filed a CFPB complaint before when I have met requirements. I put in screenshots of the offer. This is when screenshots of the offer are needed because you need to prove to CFPB what the offer was. If you don't have it, you can't send in Doctor of Credit. You need to have some kind of proof. If you have proof, send it in. Even if you don't have proof, send it in and see what CFPB does. The banks are legally required to respond, so you'll get some kind of response. I've gotten plenty of responses. Check my multitude of articles on CFPB complaints with banks. Okay, final sections here. Just some final risks and considerations. There's some impacts on your banking relationships. If you're just opening up accounts with banks and then closing them, keep in mind that that bank might not love you. I haven't had any problems with it. This is my second time doing this with Chase, and I have Chase credit cards. I haven't heard any ramifications. I even received a call on my newest account saying, welcome to Chase. Thanks for being a member. They like new accounts. It makes their shareholders happy. There's new people opening up the account. In conclusion, I truly think that the average person can supplement their income with at least $1,000 every year in bank account bonuses with minimal effort, especially if they have easy access to an updatable direct deposit. This year, I've personally opened up 19 accounts with the purpose of just getting some kind of bonus or benefit from them, whether it be for debit cards or for bank account bonuses. In the show notes, I have my year-to-year bonuses that I've earned. In 2021, it was $2.25K. 2022, it was $6K. 2023 is $4K. This year, thus far, it's been $4,000. And I'm currently pending about 1,100 that are currently in flight that I'm expecting to get paid out. I think this is pretty lucrative. I think you can easily supplement some of your income. Just get some more money. Make your money make money. I love that I'm already getting paid. I'm already getting a paycheck, but now my paycheck can make money. That's the beauty of these bank account bonuses. I can just move funds places and money will just appear. Like that to me is so powerful. And truly, it takes money to make money. You can take your money, deposit it somewhere, and get more money from it. Not from like APY, but just from opening an account. Just from being smart with some things. And really, that's it. I hope this was informative. I hope this was useful. I hope I've convinced you to try bank account bonuses. There really aren't many downsides. Like looking at the pros and cons sheet, there's one pro and 5 cons, but I don't think there are really any cons. I'm just trying to spell out everything that there is. And the cons are so minimum that there are a bunch of them, but they're really not cons. Time and effort, you're getting paid hundreds of dollars to do this. Potential impact on your credit score. Don't do one that has a hard inquiry. Impact on your check score. No one cares about a check score. Potential fees and missed bonuses. You're going to get a bonus. If you missed a bonus, then you made a oopsie. Whoops, you wasted time. Okay, it's like you scrolled through TikTok for a few hours. It's minimally more complex in taxes. Yeah, you have to say you reported some money on interest, but it feels good at the end of the year. Every time I found my tax in the year, I'm like, oh my gosh, I made $4,000 doing this last year? Holy moly. All right, that's it. I hope you like it. I hope you consider it. Hope you join the Patreon, patreon.com/Journers Digest. There's the Discord there you can join as well. And thanks for listening as always, and have a good one.
Drowning in the wake of time, clock is ticking on my prime, but only in my mind. And I'm walking down a dead-end town, I don't know my way around, and I can't hear a sound. Drowning in the night, drowning is my